Okay, Hosen Investment and Suicide. This is being done on June 15th, but it probably won't be posted since I don't have control over when it's posted. It'll probably be sometime in June. But perhaps the stock prices will be even lower. That would be my guess. Canadian Oil Sands trades in Toronto, trades as an ADR. COSWF. It's below 30 now. I have a feeling this company right now is worth present value, liquidation value, 45, I'd say. So if you bought it below 30 or 27, you'd get a good discount, and it pays you dividend. Total, T-O-T, trades in New York. It's a French integrated oil company. Buy it at 50. At 50, it'll pay maybe 6.5% dividend. They have a lot of oil. Unfortunately, they also have refineries. The things you don't want are refineries, and you don't want, for the long term, oil refining is a lousy business. And what you don't want is North American gas, natural gas. But, if you can get it cheap enough, even North American natural gas, will probably, companies that produce it may be undervalued at some price. Statoil is the Norwegian national oil company. 1/3 of their shares are held by the public. 2/3 by the Norwegian government. What I've found out recently is that they're not very deep in oil reserves. Mostly what they produce is oil, but their reserves are like 5 years. But they have a lot more natural gas, and they're very good explorers. This is a government-run company that really knows what it's doing. And at the moment, it's like 23. If it got down to 22 or even a little lower, it would be paying 5.5%, 6%. Pays a dividend anyway. They have natural gas that they sell in Europe and Asia. Natural gas in Europe and Asia is much more valuable than North American gas. Flowserve is a water filtration company, a pump company. FLS, if it should collapse because of deep problems in the world economy, you watch my video, you know my views on the American economy, that it's not worth shit and will get worse. Flowserve below 85. I bought it at 47 back in the bad old days of 2009. but unfortunately I sold it at 100. CACI, C-A-C-I, this is a company that's a service provider mostly to the U.S. government and the U.S. military. It does not require a lot of capital investment, has strong free cash flow. So virtually their entire earnings consists of free cash. The company is at 61, and it deserves to be 61, but it doesn't deserve to be bought there. It's a play on cybersecurity, which is going to be a growth area. It's just not easy to invest well. So if CACI goes, C-A-C-I, goes to 52, like for an hour, grab it. IOSP, I don't know what that stands for, but I made some money. My newsletter called Capital in Crisis. I've been taking it for about 5 years. Written by a guy by the name of Bob Meyer. He recommended that at 26. I think I bought it at 28, sold it at 33. It's still around 33. It may not go down, but it's a specialty chemical company that makes additives for petroleum products. Generates lots of cash. Buy it, if it hits 28, it'd probably be a buy. ROC is Rockwood Holdings. I sold it recently when I went almost entirely to cash. It's about 46 now. If it hits 42, which is where I bought it originally, early in the year, buy it. Teva Pharmaceuticals. It's a large drug company, may pay a dividend, may not. Generates lots of cash flow. Free cash flow is about $5. So that's a very high free cash flow return on a $49 stock. It's basically a generic drug company, the largest and most aggressive and with the biggest product line, I believe. But they also have drugs that they themselves have patents on, original patents, a couple of them. I don't know what the hell. I mean, this is like, to me, science. But if Teva gets down to 44, I think it would be a buy. I own it for my niece now. I bought it at about 46, and I haven't sold it. Scott Black recommended a coal company that's a limited partnership, pays at a price of 65. It's trading above that. And it's ARLP. I've owned it before. At about 65, it pays maybe close to a 6% dividend. This is a coal company. Coal companies don't pay dividends. But this is a limited partnership, so they pass through their earnings. ACM is a water consulting company. It's trading for 27, buy it at 24. MIC is something, the woman with the straight hair in the Barron's Round Table. She's always been my favorite there. As she gains weight over the years, she's gotten less good, however. So this is Macquarie Infrastructure, MIC. It's probably 28. Buy it at 25. She recommends IPHS. I can't remember what that stands for, but it seemed like she's very clever at digging out real businesses that you wouldn't have heard of while there's still values. So if it gets down to 40, it popped when it was mentioned in Barron's. But if it gets down to 40, I would buy it. Morgan Stanley at 20 or 21. That's just a hunch. I mean, I go by my gut. That, I found that all the analysis I do, in the end, whether I pull the trigger on a trade, depends on my emotional state. Am I nauseated? Am I calm? KRO 24, that's a specialty chemical company, buy it at 24. CVA, Mayor recommended that. I haven't had a chance to read it. But it looked like an interesting idea. He's kind of an interesting guy, although I think he may be political right-winger. So CVA at 15. Only one more UPL, oh no, more than one. UPL, Ultra Petroleum, this is natural gas. You can get it if you assume that natural gas over the next 15, 20 years, North America, will average $6. I think, I think that's a good probability. Ultra has very deep, has a surfeit of reserves, and probably, well, buy it at 40. It could actually literally have a liquidation value of 65 or 70. SU. This is Suncor. I got this from Charlie Maxwell in 02, back when I was selling for 5. But if it gets down to 35, this is almost a pure oil sands play, and it's not doing well now. Oh, we're getting to the end. Okay, there'll probably be one more short one, because I got some more stocks for you. Okay, so knock it off.